Okay. So I just want to welcome everybody. I think I know probably everybody here. So thank you for coming. We have a couple of guest speakers. I've gotten a lot of questions about financing when we go through the process looking to buy or even sell. So we asked Bank of America, we asked Sandra Saravia and Josh Donovan to come and help us out with some of that financing, SBA lending. And actually, Sandra helped me at my school when I had my center in Belleville. So she got us through COVID and really helped us out there. And then we have Neil, what's your last name? Neil Caesar. I just have Neil on here. Neil Caesar from NJEDA. He's going to walk us through some of the other financing options that are out there through that organization, and maybe some of the grants that are out there. We were talking about some a couple of weeks ago that if you read the basic, like high level of the grant, you wouldn't even think that childcare would apply, but it does. So he'll be able to talk to you about some of those things. And if you have questions at the end, we'll go through that. If you haven't gotten food yet, please go do that. On your, or actually, I think you were given one when you signed in, and please don't forget to sign in. We included some information that we have, one about buying centers, one about selling centers, and then we listed the centers that we do currently have on the market. So if you have any questions about any of these centers, most of you probably already have an NDA with us. If not, we'll get that from you, and then we can give you some information, the specifics about these centers. Most of them are still on the market. Some include the real estate, some do not. So if you have any questions about these, just ask me. We are actually probably going to be going to look at one of the ones in Mars County this weekend. So if anybody wanted to hop on that, you're more than welcome. And we actually have a few in Mars County and another one in Mars County, probably one night next week. So, let me know if you are interested. And I'm going to hand it over to Sandra and Josh first. Okay. Yes.
Good evening, ladies and gentlemen. Thank you for having us here tonight. My name is Josh Donovan. I'm with Bank of America. I've been with the bank about 15 years. I'm a SBA lender primarily. For those of you who have not heard of what the SBA is, it's the Small Business Administration. You may have heard of it through PPP loans or EIDL. That's not what I do. Those were emergency COVID type of measures. I facilitate two lending programs on behalf of Bank of America. One is called the 7A, and one is called the 504. I'll try and keep this simple so you guys don't have to take too many notes. The 7A is a program that's essentially an insurance program for the bank, right? We get a 75% guarantee on the loan proceeds in case the loan goes bad. That's the incentive for us to take on risk that we would traditionally not do, right? So if we say, hey, we don't like this because of one of the 5 C's. Has everybody heard of the 5 C's before? Cash, collateral, credit, character, etc. If one of those 5 C's is not up to snuff, we would say, oh, the 7A is a great way to offset that risk that we would have using that insurance policy called the 7A. 7A loans are capped at $5 million, and you can include the fees for the 7A program into the loan. The 7A can be used for working capital and fixed assets. So a lot of times you will hear someone say, oh, I'm getting a 7A loan or I'm getting an SBA loan. Typically what they're getting is a 7A loan from just about any bank in the country can do an SBA loan. We're a preferred lender. What that just means is that when you come to us and ask for an SBA loan, we don't have to ask the SBA for permission. We just tell them that we're doing this loan because we're a lender that has enough experience to know what the preferences are for the SBA. Hopefully that means that we process your loan request faster. I will say there's 2 levels of the SBA 7A program. There's the Express, which is up to $500,000. And the Express is typically used for working capital, but we have seen, smaller real estate transactions that are at $500,000. Why it's called the Express is basically it means that there's less collateral requirements, there's less documentation. Hopefully we can, fund it faster. But again, it's capped at $500,000. The regular 7A is everything above that, right? And one thing to note is that if you have, let's say you have a location and you're going to be doing renovations to it, that's a very common use of funds. You can't use an Express loan, even though it might only be a $200,000 project or something like that. The SBA does not allow us to do renovations with with the express loan. So you do have to do the 7A. The other loan program that the SBA facilitates is called the 504. And essentially the way it works is it's 50-40-10. It's the simplest way to think of it. It's only for fixed assets. What are fixed assets? Real estate, renovations, equipment, land, things like that. The 504 is where the bank does typically 50% of the financing in first lien position, and the SBA comes in and does a subordinate junior loan behind the bank for 40%, and you put in 10%. I should have said the 7A, we also try and accomplish 90% financing on most cases with the 7A as well. But with a 504, we're buying real estate, you're renovating it. Let's say that this was your childcare center, right? It was $500,000 to buy it. It's another $500,000 to renovate it, and maybe you've got to put some equipment in, depending on what the equipment is. All of that can be done with a 504 or a 7A. The 7A can cover everything, working capital and fixed assets. 504 is just fixed assets. The good thing about the 504 is, though, it goes above $5 million. That may not be necessarily germane to your situation at this exact moment, but who knows, maybe you're going to grow and you'll be killing it and you'll be wanting those bigger loans. The incentive for the bank is we have 50% of the risk, but 100% of the collateral. We consider the banks, or the SBA's financing behind us to be basically equity, because we don't care if they get paid or not. We only care if we get paid, right? So this is one of the reasons that we like using the 504 program. Now, when you do a 7A loan, you're coming to the bank and we're doing all the underwriting, we're doing all the packaging, closing, everything's Bank of America. Now, we do have to use SBA forms and we do have to do the SBA's process to make sure that they honor that insurance, right, later on down the road, but it's a Bank of America loan. When we do a 504, we're actually working with partners, what's called a CDC, Certified Development Company, and they are working to, in tandem, do the loan with us. Basically, they have the same underwriting criteria, but they might have a couple other forms, like they want to know certain demographics, or how many jobs are you creating, or are you a minority that checks a box for the government saying that they're doing something that's economic development, right? I sit on the board of a CDC called RBAC, based out of Princeton, and as we speak right now, I'm financing a child care center for $600,000 in Atlantic County. Right, so this is very, very germane. Half the money is coming from us, half the money is coming from the CDC, and it's a very useful program. And the rates that the SBA offers are fixed every month. They offer two flavors. This is only for the 504. They offer a 20-year note that's at 6.27% and a 25-year note that's at 6.24%. You say, why is the 25-year money cheaper? Because it's an inverted yield curve. If you've ever heard that terminology, it basically means that it's expected that rates are going to be cheaper in the long term than they are in the near term. But what it means for you is that you can get the longest amortization at the cheapest price. And if you're not familiar with what amortization really means, think about it like this. You would not buy a house and want to finance it in 5 years, or buy a car and finance it over 30 years, right? You want the amortization to match the use of the asset. Same thing, when you're buying real estate or you're getting a business loan, the longer the amortization, typically the better, so that you can spread out the payments as long as possible and your cash flows as small as possible. That being said, that's kind of the SBA in a nutshell. There's another program that the SBA has, what's called the Community Advantage Program. Again, Bank of America doesn't do this, but it's basically the 7A for that CDFIs, CDCs do. And again, the CDC that I work with, RBAC, if you guys want to know, they do these. I think the loans go up to $250,000. What's really good about the cap loans is that they are for startups, and they will work with people that are doing deals with projections, et cetera, et cetera. So that's something to keep in mind. Now, when we talk about eligibility requirements actually, let me back up. Benefits of SBA loans. What's the first benefit of the SBA loan? The first benefit is that you're typically getting 90% financing versus 80% or no financing. I like to think of the 7A program as kind of the loan of last resort, right? Because a lot of times Sandra will call me up and she said, hey, I have this deal. It's we're doing renovations to a leasehold location, right? And the bank says, we've got no collateral. We can't rip the fixtures off the wall, right? We're not going to be able to take this. It's not going to help us at all. So we use the 7A program, right? Because we have that insurance policy that kind of makes us feel more comfortable. And now we're able to do a loan that we normally wouldn't do. So not only can we do projects that we wouldn't otherwise do, but we can do them at 90% financing, such as purchasing a building. If you've never bought commercial real estate, and I know you've got a lot of great realtors here, but if you haven't bought before, typically you're putting 20% down. It's not like buying your house where you put 3 or 5%, something like that. You're usually putting 20%. Why are you putting so much money down? It's a cushion for your lender in case something goes bad and we've got a collateral, we got to take the collateral back. We got to hire a realtor, we got to hire an attorney, we got to go to, all that stuff costs money. That's why they want you to have more skin in the game so that you can protect the lender. But it makes it more difficult, of course, to buy a piece of property because in New Jersey, property start at $1 million or whatever. Well, the SBA, that's their thing, right? They say, hey, we want to help you guys get in business if you're not already in business, or even if you are already in business, we know that it costs a lot of money to do that. So to facilitate the economy, they're going to try and get you down, to 10% injection, right? That's one of the main benefits. The other main benefit is 25-year amortization for real estate and 10 years for working capital. If you go to Sandra or Neil, who you'll meet later, and you normally would get like a bank loan, you're getting a very short amortization. For working capital needs, it might be 3 years or less. For real estate, 15 years. Same commercial real estate, 15 years. Not like your house where you get 30 years. But with the SBA, you can go out to 25 years. So again, it's what makes it more affordable, makes it easier to cross that threshold. Skipping over to eligibility requirements and application process. Generally speaking, the SBA will work with anybody that wants to start a business, whether it's childcare or not. The SBA's, says, hey, we also want to see that you have collateral for the loans and things like that. But they won't tell you that if you have no collateral, you're not qualified, right? They'll just keep asking for collateral if you have it. So for example, we might have two qualified candidates here. They both want to do the exact same thing. One person owns a house and one person doesn't. They're going to ask for your house because you have it, and they can't ask for yours because you don't have one. But you're still going to get the same loan. Now, what you have to think about is on top of that, every bank has their own credit policy. So some banks might be more conservative and some might be less conservative, right? But I, as Bank of America, I get to say what I want to do within the SBA program. So even though they might say, hey, I should lend to you because you have no collateral, I might say, no, sorry, that's too risky for me. I'm only going to lend to her because she's got a house, at least something that I can take. So you have to keep that in mind. When you're talking with SBA lenders, they're not all identical. There is an overall big program that they have to follow, but they're not identical, okay? And don't take it personally. Hold on, sorry. Getting old here. In general, what are the eligibility requirements that Bank of America might have? We generally like to see that you've been in business for at least 2 years and that you have historical cash flow. Now, if you're not familiar with what cash flow is, it's not the same thing as net income. Generally, cash flow means your net income, your depreciation, and any add backs like rent, right? So if you're buying a location but you were renting it already, we can add the rent back to the number. We can add the depreciation because that's a paper loss, and we can add the net income. And we say, okay, how much money do you make? Let's say that you're making $10 a month in those things. But the loan costs $9 a month. Great. You make more money than it costs to pay for the loan. Your cash flow is good. The number that we like to look for with SBA loans, all SBA lenders, is 1.15. That means you have $1.15 in free cash for the dollar of debt that you're going to be taking on. So again, we want to see 2 years of operating history, and typically we want to see that 1.15 number for 2 years. Now, you might say, hey, Josh, I don't have that. I've been in business for a year, or we had a tough time because of COVID or whatever the case may be today. There are all alternatives. There are other SBA lenders. I want everyone to come to Bank of America and work with Sandra, of course. But I more importantly want you guys all to get the financing that you need. So you can shop around. And again, the other thing that I think that you should do, go to SBA.gov. They have a list of all the lenders that do all the SBA programs, 7A, 504, the CAP Express loan that CAP 7A program, because that's really for entrepreneurs that are like trying to get their foot in the door. But that being said, those are the two general requirements. Something that I have to mention because it just changed like literally 4 days ago is the government said that you have to be a U.S. citizen or a legal permanent resident, and everybody who owns the business has to qualify under that. That's totally new. Didn't used to be that way. I don't know that I agree with it or not, but that's how it is. So just keep that in mind. No, to get an SBA loan. Oh, you can. I mean, anybody can own a business. I'm just saying to get an SBA loan now. So, for example, I might have had a client who had a silent partner, a parent that lived in some foreign country. That parent, if they still own the business, will exclude that customer from getting a loan from us now, or at least an SBA loan. Anyways, okay. Collateral. That's one of the main things that we generally look for all loans. Obviously, it's harder for working capital needs. And what does working capital mean? That means like you need money for marketing. You want to buy out your partner. You want to acquire a business, whether it's a stock purchase or an asset purchase, right? All those things are called working capital, things that are not fixed assets, essentially. And so we still want to see collateral. Be prepared to put up your house or whatever investment property you might have as an alternative to, commercial property for that type of loan. If we're doing a real estate transaction for, the building itself, then usually that building is the only collateral that we have to take. We don't have to touch your personal assets. Preparing a winning loan application. I don't necessarily come across people that have to do a business plan, but I'm not necessarily working with entrepreneurs because, as I told you guys before, Bank of America is typically looking for someone who's been in business for 2 years. But let's say that you've already been in business for 2 years. I do expect you to be able to answer information about your company, like why is your net income this? Why is why did your sales go down this time? What is your cycle? Like when do you have, how many students do you have in your daycare? How many teachers do you have, and what's going on? What do you expect to happen in the next 24 months? Generally speaking, if someone's going to ask you for projections, they're going to ask for 24 months of projections, 2 years. And so, when you are filling out those projections, something called assumptions. I don't know if you guys have ever heard that term, but the assumptions are basically the formula that you're using to make that, right? So if you said, hey, I'm going to make $100,000 in profit every month, what's that based off of? What's the assumption? Oh, I have 150 students. I'm charging, $1,000 a month, and blah, blah, blah. That's the math. Those are the assumptions. Your assumptions need to be solid, right? Everybody, of course, always says, oh, I'm gonna make $1 million, right? But try and keep it realistic. That's the one thing I could say there. If you do need to develop a business plan, you can go to the small business development centers. Almost every community college is kind of partnered with those. But again, you can go on SBA.gov and check it out. Small business development centers, they will hire free consultants for you. So if you need a marketing person, if you need a realtor or a lawyer or an accountant, they will have someone come in and give you hours worth of free services. That's SBA, but it's through the Small Business Development Center, SBDC. Almost every county typically has a SBDC center that's associated with like their community college typically. And I know I used to be an SBDC counselor. I used to give my free services many years ago. Financial projections and cash flow management. That was exactly what I was talking about there, the projections. You basically want to make sure that what you're saying makes sense every month, right? You're not just, for example, I see this all the time. Someone says, oh, you know what? Pet care is a $10 billion a year industry, right? And there's only 20 pet care companies in the country. I'm going to be 21, so I'm going to get 1/21th share of a $10 billion industry. I say, that makes no sense. Why do you think you're going to do what these other companies are doing? That's an insane assumption, right? So you got to have everything based in reality. And I don't mean to sound, like I'm talking down to anyone. I just mean like, it really, when I'm going to ask you, why are you coming to these calculations? And you have to have a logical answer. Common pitfalls and how to avoid loan rejection. I would say the first thing that you need to do, my experience is, make sure your credit is clean, your personal credit, because don't make any mistake, your personal credit will be pulled for any business loan you ever pull. Unless you become IBM, your personal credit, even companies that are making $100 million, I'm pulling their personal credit. I'm looking at the CEO and I'm saying, what does his personal credit look like? And if he's past due on his mortgage, I'm going to say, well, how am I not going to be the next guy when it comes to the business loan? So try and clean up your credit, right?
Around what average is
A
good?
credit score,
Credit score?
everybody's different. I mean, I hear 650 from some people, but generally speaking, it's not the score as much as it is what's, if I look and there's 10 derogatories and it says, oh, you didn't pay your phone bill, oh, you didn't pay your landlord, oh, you didn't pay this, I'm going to say, you want me to be the next guy in line? I don't think so, right? This is not going to happen. But if you had, okay, you had an emergency, you had to go to the hospital and you have an emergency, medical bill or something like that, okay, there's a story behind that, right? But it's the pattern that we're looking for. That's generally speaking.
Look like in the past five or just like in the last
Well,
few
I will
years?
tell you this, a bankruptcy is a kiss of death, right? If you've had a bankruptcy within the last 15 years, you're going to be really hard to finance with any traditional lender.
What about the council credit?
What?
Council credit?
No, I don't think so. But I mean, think about it the same way like as trying to buy a house, right? If you've ever tried to buy a house and you had those issues, we're pretty much the same when it comes to that. How much time do I have? I don't want to take up too much time. I still have a few more things to say if I can just talk. Okay, go ahead.
Before you go, so back to your collateral question.
Yes, of course.
Why should I go to SBA against go to the bank? Or
Versus conventional, you mean?
When I buy a house, for
Mm.
example, my house is collateral. It's a mortgage.
Sure.
Then I'm a business.
Right.
Even the business is my collateral.
Okay, that's a great question.
And what's the difference
Uh-huh.
going to bank in terms of interest rates or paying back?
Hmm.
You know,
Versus like a home equity line?
She has a collateral. She doesn't have collateral.
Right.
Okay.
I will answer your question. I know exactly what you're saying. Okay, so I have some people, they'll have, a house, to have a beach house, and they say, gosh, why am I getting this SBA loan from you when I could just go get a home equity line of credit, right? And I could borrow at a certain rate. And I'll say to you, hey, if you have access to all other funds, and the interest rate's significantly different, maybe that's what you do. I'm not gonna push the SBA on you just because, you don't have to take the SBA is what I'm saying. But think about it like this. From the bank's perspective, if you come to us for a regular conventional, and conventional is our term for everything that's normal, I guess, we are going to say we only look at business collateral, right? So if you're doing renovations to your business, there's no collateral in that for us. Renovations to a building that you don't own are your landlord's property, not ours. We're not going to rip it off the wall and take it back and sell it to somebody. So in that regard, you have no collateral. I have successful companies, lawyers and accountants who come to me and say, hey, I want to buy my partner out. Well, what does your firm consist of besides a couple of laptops and attorneys or accountants? Nothing, right? It's accounts receivable. There's no collateral in that. Even, those type of companies still have to come to us and talk about SBA lending because from a bank's perspective, there's no collateral there, right? Now, what does the SBA allow us to do? It allows us to substitute personal collateral, your personal home, maybe a vacation house, something like that, in lieu of commercial collateral that you might not have. That's really the way that I look at it is that substitution. But again, if you have access to other funds, I mean, yeah, the one thing I would say to you though is other than maybe a home equity line of credit, you're probably not going to get better terms, right? Because the SBA is going to give you a 10-year term on working capital, a 25-year term on real estate. You're not going to really see that. And in some cases, you can do 7A lending where you do the business acquisition and the building acquisition and get all of it done in 25 years. Bank of America might not be totally doing that, but some of the lenders are. So you can never get a 25-year loan, to do that any other way.
So the specific example,
Mhm.
same thing. She has a house, she doesn't have a house.
Right.
But she's buying a house and renting it out.
Mm-hmm.
She doesn't have a house now.
Right.
As a business, she wants to buy another house with 2 apartments or 3 apartments, where one she lives,
Mhm.
2 she rents.
That's
It becomes her business.
That's not a business. That's investment real estate. That's not. I mean,
So
it's not a
that's what I
business
want to
that.
understand.
That's not a business that the
So
bank would consider.
SBA
business.
will not consider that as
No, because that's passive income. You're getting passive
You
income.
answer my question.
Now, could you buy a childcare center that has 2,000 square feet on the bottom and 1,000 square feet of rental space above that's residential or anything else? Absolutely.
That's considered.
You have to be a 51% owner occupant. That's one I should have said that. I'm sorry. 51% owner occupancy by square footage, not income. That's the one thing that's important. And I have lots of clients that will buy a space, maybe not in childcare, but like they'll buy a warehouse or they'll buy a building like this, and they need 51% of it, but they think they're going to grow, right? Now, I can't count the income from the rental because I don't know if you're going to be a good landlord, right? But I can let you buy that bigger building even though you're not using all the space. And, if you make some money off of it as a landlord, great.
But even a person has a house
Mm-hmm.
and he or she wants to buy another one as a business to rent it out totally.
That's passive income. That's all investment. Right. And these fine ladies here, I know, maybe there's a gentleman over there, have other contacts that will be happy to lend you for investment, multifamily, that kind of stuff. The only other thing I would say is, if you're really interested in this kind of stuff, we also have a second flyer. And I don't know if you guys have started looking yet, but we do franchise financing too. Now that's actually one thing where we do finance startups. And basically the bank's perception is, hey, these franchises are so good that you're not going to fail. And if you decide to buy one of these franchises and you come to us and say, hey, I'm going to buy this franchise, I want this location, it's a startup, we'll do 90%, 100% financing for you. As a startup, we don't do that almost for any other business, but for those we do. So if you have one of these businesses that has a star, and I apologize, the last one, Lightning Academy, should not be on there, but the ones with a star, those are the ones that you might want to look into if you can buy one of those franchises. And we will be happy to talk with you. I think it's my turn to turn things over to Sandra before I monopolize. But before I do that, are there any other questions?
Yeah, before you end, you were going to the factors for SBA loan.
Factors?
Yeah, you started with clean credit.
Yeah, basic. Yeah, sure. I mean, credit is the 5 C's, right? We're looking. I would say to you, we want to make sure that you have experience. That's the biggest thing, right? If you don't have experience, man, that's really tough, unless you're buying one of these franchises, right? That's the workaround. The other thing is, and think about this too. Like, if you said to me, hey, I ran this franchise, but I sold it 2 years ago, now I want to buy another one, I'm still going to be challenged because you're not operating that franchise that you want to buy, or I shouldn't say franchise, but that business that you want to buy. But if you're the manager of that business and the owner is leaving and retiring and they're going to sell it to you, that's great, because now I can make the linkage that what you're doing is going to continue, the finances of the company are going to continue over time. Right? Whereas if you just took over any random business, how do I know you're going to run it well? I don't know. Just because it did well before doesn't mean you're going to do it well. That's how I have to think, right? Not to be, but the other thing is, for Bank of America, it's 2 years of operating history. It's the debt service, 1.15. Those are basically the things, collateral.
Does having existing SBA loan
preclude you from? No. Okay, so with a 7A, you have a $5 million cap. So if you had a $3 million SBA loan for one location and you want to get another 7A loan, I can only lend you $2 million. Good news, though, is with the 504, you can exceed that limit. And generally, when you're doing a 504, because it's only for real estate, half the money's coming from the bank. So that same $2 million project, you're only getting $1 million from the SBA now. Now you're still within the 5. And who knows, maybe you're going to put solar panels on the roof. You're green, and they'll let you do as many green projects as you want. Right? Seriously. I have clients that have come to me 4 or 5 times. They put solar panels on the roof, and we just did the next one. I hope that answers your question.
I just have a quick question.
Yes.
You have a contract from the county
Mm-hmm.
to bring in kids
Mm-hmm.
to your daycare.
Mm-hmm.
Is that considered not collateral, but like?
It's not collateral, and here's the problem with that. On one hand, yes, it demonstrates that you have business, but the problem is those contracts are for how long, and what happens if somebody else gets elected, or what happens if it's changed, and to put it into that mindset, okay, what's your contract for? Is it 2 years, 5 years? Because we have a lot of busing companies where that same thing, right? And they're like, okay, well, I can only give you a loan for 2 or 5 years. All right, Sandra, please. Thank you. I'll be here after I get a bite to eat, I promise.
All right. So I really want to, first of all, say thank you for being here with us. We really do appreciate it. I know Lori for a few years now, and happy to be here to just not only give you some more information about lending, but I want to start giving you a very simple thing that is happening right now with Bank of America, where we help business clients in different stages, and I'm going to explain. Right now, any client that is from $0 to $1 million in revenue, we serve those clients at the branch, right? Any client that is established business, meaning 2 years in business, and is from $1 million to $20 million in revenue, we have a group that is a small business bankers that will be assigned to you guys to help you with anything from checking account, credit card, line of credits, commercial real estate, you may name it. Anything you need for the business. You have to be 2 years in business, just like Josh just mentioned. Then we have another group that is more for more sophisticated business clients that is from 20 million up to 50 plus million dollars. So we have clients that they have a parent company in Switzerland, and they have account in United States. That type of complex clients, that's how we handle those clients at this point. And we do complex checking, cash management, commercial credit cards, no regular credit cards. And I want to explain that too. Commercial real estate, working capital line of credit, and you name it. And it's all based on the customer revenue. I really want just to start on that basic, just because I think sometimes clients, they walk to our branches and they are like $25 million in revenue. And then the person that is sitting in the branch have just, experience up to $1 million, and sometimes they have to refer that to another banker. So I want you to know that we have a specific banker for a specific level of company. So we do in any of these levels, we have unsecured line of credits that we can help you out. You have to be in a business again 2 years, and it all depends what you need. But we have unsecured line of credits up to $250,000. Then we have secure line of credits that we use your account receivables and your inventory if you have any. The reason that I'm mentioning all this is because I know that maybe you are in the daycare business, but maybe you know somebody else that is in a different business. Construction, manufacturing company, doctors, dentists. So that's why I'm just giving you all this information. We do have small business credit cards that is for small business clients from 1 to 20 million. We do pull the clients, the guarantor's credit. So if you are applying for a small business credit card and you own a business between $1 to $20 million in revenue, you are going to be the guarantor of that credit card plus the business. So we have to pull your credit. I think that's important to know. And the 20 million, 50 plus million dollars in revenue, we do commercial credit cards where we don't require guarantors. So we have different levels of how we can help. And I have to say, I started in Bank of America at the branch. I moved from the branch to small business banking, and now I'm in commercial banking. So I have been in all those levels, so I feel very comfortable telling you that when you start moving in revenue, we have more resources to help you. So we never stop helping clients. And we have another level that is the highest, that's corporate like Tesla, Amazon, that is billions of dollars in revenue, obviously. We also provide to you guys commercial real estate, and it's conventional. And of course, I work with Josh when it comes to SBA. So we always trying to give our clients both options. What is the difference between SBA and conventional? And the biggest difference is two. We do up to 80% financing on the conventional side, and then Josh that 90%. Down payment, you have to give us 20% instead of 20% down payment SBA. So it's a big difference. So we work very close together, and we come to you and say, hey, this is what we have for you. We can try to get you in conventional or SBAs or vice versa. So we always help you in that way. Something else that I want to talk is this. And I know that Josh talked about the franchises. This is not the only ones that we have. We have food franchises, manufacturing, cleaning, you name it. If you need more information, my business card is on the table. Just email me. That's my cell. You can text me anytime. Very good replying. If you want to know what other franchises are out there, I literally just print the one for the childcare because that's what we want to focus today. But we've a bunch of ones that we finance, and it's 100%. Also, I want to mention this to you only because I know maybe you have a doctor, dentist, or veterinarian that maybe is your friend, your neighbor, or you own veterinarian for your dog, and maybe you are talking and they are looking for financing. So Bank of America is very unique in that space. So we do have a space that's called Practice Solution, and it's only for doctors, veterinarians, and dentists. You can literally graduate today, and tomorrow we help you to finance 100% to open your own practice from ground up. So building, equipment, working capital, line of credit, commercial real estate, we help you to do all your practice. What else I want to mention? So in all levels, just want to, again, want to mention to you guys that you have to be in business for 2 years minimum. I want just to hear from you, how many of you are a business owner with over 2 years in business? Okay, good. And what type of business do you have? Childcare, good. What about you? Yeah. IT, perfect. I have many IT clients in my space. And I literally have like 20 in my book right now that they are IT clients, that they used to work with Bank of America, now they have their own company. So we have in different levels, different industries. So like I mentioned, manufacturing, childcare, anything that is IT, we can help you in any level that you are looking for. So if you are thinking to open your own business, we can help you, or I can help you to put you to the right person, because it will be a new business. So I can help you to tell you what documentation you need, from the state of New Jersey, the EIN number, all the stuff, so you can be able to open your business. We educate our clients as well, so that's no problem if you want to email me or text me for any question. I'm not sure if I'm leaving anything behind, but just don't want to repeat what just Josh said. We're just here to make sure that you put your voice out there, that we're here to help our business clients in any way, and that you can hear from us. We have all levels of financing when it comes to SBA, conventional, practice solutions, franchise solutions. We offer it all. So let us know if there's any questions for me that you may have.
So when it's a franchise, you say you can rent like 80%. So when you
Up
bring
90
cash,
to 100% sometimes, up to 100%.
So see, it's like 90, I have to bring the 10%
Mhm.
cash or
Yeah.
yeah.
And then I have a list that I can share with you if you are looking to explore that. Yeah, because this is not the only ones that we have. We have restaurants and fast food, you name it, everything. Yes.
So you mentioned about the corporation, right?
Yes.
You have a list of corporations.
Yes. Good question. We do have a group in Bank of America, Practice Solutions, that the only thing that they do is to help you to find a practice to buy it, or to sell your practice if you want to sell it. Or if you have a son that just graduated and you need somebody to help, we have the group as well. Yes, we do offer everything. In the Practice Solution space, we use mixed use. So I have a dentist that we just did a loan last year, where he's going to occupy 60% of the building and he's going to rent the top. So we were able to do it. So we don't do any investment property like Josh mentioned, but just want to put that out there. I know that a lot of doctors and dentists and veterinarians, they are like looking for financing, and sometimes they don't even know that Bank of America offer. And I just want to bring that up to you guys. Any other questions? So, and that's a great question. We have a big list of medical doctors that we help, and some they are exclude. Just call me directly, and I can check that for you. Yeah, yeah, absolutely. Yeah, I don't have the list with me, unfortunately, and it's long. As you know, it's a lot of specialists in different areas. So I can check that for you. Again, my email and my cell is on the card, and also on the flyer for SBA, the second one. Information. Anything else? Any other questions for me? Thank you so much for your time. Really appreciate it.
Neil Caesar. I work with the New Jersey Economic Development Authority, also known as the NJEDA. How many people here are at least familiar, heard of the EDA before? A few of us. What do you know about it? Like, what was your experience with them?
I've applied for some childcare improvement grants.
Okay.
I've applied, when it's COVID time, a lot of different programs there. And I've been to a couple of NJEDA events.
Okay, all right. So the EDA is the state's chief economic engine. We have tons of different programs and initiatives and tax incentives, including grants and loans. My job, I work as a business development officer for the state. So I'm more or less like a loan officer for the state of New Jersey. A lot of people don't know that we have our own loan programs. Hopefully at the end of this, Lori or Cheryl will send you the video from this, because everything Josh says is spot on in terms of like the lending world. Even though SBA has their specific rules and nuances, but you're going to hear that, we always encourage people to talk to different banks, talk to different lenders, talk to, SBA lenders. There's these organizations like CDCs he talked about, and CDFIs, and even EDA, NJEDA. We also have our own loan programs. So I'll highlight a few loan programs that we have, and also talk about some of the grants that we have for different businesses. Currently, the EDA, we have 3 different loan programs. The first one is called the Small Business Fund, which is just a name. That's a fund for loans for up to $500,000. And the requirement is that your business makes less than $3 million. Many of the loans that the programs that we have for the EDA in terms of loans is really just try to be an extension of the products that's out there, kind of widen the net to give more people access to capital. So that particular fund, as Josh mentioned, most banks, they'll require you to have 2 years of business. This particular fund that the EDA has allows you to apply if you have only 1 year of business, 1 year of tax returns. Obviously, you have to be in business, you have to be profitable. The same thing applies as far as cash flow. That's not going to change no matter where you go. One thing I tell people think of EDA and they see .gov behind our name, they think, oh, it's a government agency, kind of non-profitish. They're still in the business of being profitable. It's not charity. It's not altruistic. We do try to, put our arms around people, support them. But, a lot of the things as far as banking goes, it's going to be the same thing. So you do have to be, at least for that particular fund, it goes up to $500,000. It's called a Small Business Fund. 1 year in business. He did mention as far as debt cash flow ratio, as far as EDA, I think he said 1.15. This particular fund, it's only for businesses 1.0, so you need to break even. That's in this particular case. We only finance real estate, real assets, real estate, equipment, and working capital. Similarly, on real estate, we typically go out to about 20 years. We can do 25, but 20 years is our comfort spot on amortization. Equipment, 5 to 10 years, is our sweet spot for that. And working capital, we're probably going to stay around 5 years for working capital. We try not to go out too long. So when he says that, SBA can go out to 10, that's why you need to go out, really have in-depth conversations with different banks and different lenders to know what makes sense for you. The rates are competitive. We base our rates on the 5, 7, or 10-year treasury. And we add additional points based on the risk profile of the borrower. That particular fund does have that particular loan program does have a credit scoring requirement of 680 as far as the FICO for at least one of the owners. That's called the Small Business Fund. That's a direct loan directly with the EDA. The other program we have is just simply named Direct Loan Program. That's another loan program, similar types of lending, equipment, working capital, and real estate, but that one could go up to $2 million. That one, the fees a little bit more pricier for that one, but it's also a good program. You need to be in that one. You need to be in business at least 2 years, and we do have a debt coverage ratio of 1.1. I do have some flyers here. I don't have too many flyers, but I have some QR codes and links. You can go on our website, get more information. I'll share my business cards with you. But I do just want to kind of let you know they exist. We do have one other program called our Premier Lender Program. Now, this is a program we do in partnership with different banks. Bank of America is one of our premier lenders. Probably about 24 or so other banks throughout the state are part of our Premier Lending Program. So in that program, which is actually a pretty attractive program, we can kind of partner with the banks and participate in the loan. We take a subordinated position to the bank in these programs. So there's no real conflict of interest there. The fees are a little bit more forgiving as far as the application fee and our rates. And you get like a blended rate between the EDA and the bank. And we can lend up to, we kind of match what the bank does. On our loans, let's just use real estate and equipment for example. We can lend officially on paper for real estate, we can lend 100% loan to value. We typically don't do that. We try to stay at 90%, meaning you put down 10% of your own money, the EDA will finance the other 90%. That's kind of our sweet spot. If we was to partner with a bank, say we partner with Bank of America, we can match what the bank does or less. So we can do 45, 45, 10, for example. I think he said with SBA is 40, 50, 10. With EDA, it can be as much as 45, 45, 10, where we do the same, or it can be that 50, 40, 10, or any scale of that, 60, 20. So sometimes in a lot of cases, and Josh can relate, a lot of you can relate, as a business owner, you may not have all that money to put, the 20% to come out of pocket. So EDA is another place you might want to look at to consider, okay, how can I finance this? Not necessarily put down, have to find 20%, 30%, and still get some type of competitive rates. So again, I have some flyers out there that kind of highlights what those different programs are. But I do want to talk about our grants. A lot of people love to hear about our grant programs because who doesn't like free money? Anybody against free money? Okay. All right. So usually I have my colleague Michelle here. She had a flat tire, so she couldn't make it. She's always like the hero of the room. I'm always here talking about taking your money. She's told you to talk about giving away money. So I'm stealing her thunder today, talking about giving away money. Before I even get into that, I wanted to say that I do have so much respect for like anybody in childcare. Let me tell you, the industries I have the most respect: childcare, teaching, and anybody in healthcare. Like especially childcare, because I have kids. I'm like, I have 2 kids, and I'm with them for a little bit of time, and you choose to do this for a living, to be with them, not just your kids, but other people's kids. So yes, it costs a lot of money, but you earn every single penny, dime, quarter that you get, because I know anybody that watch my kids, you earn that money. So God bless you. I always tell people in childcare and teachers. My sister was an educator for retired educator. Like you're literally doing God's work, because I couldn't do it. Like I'm just a servant. I couldn't, but you're really doing God's work. So salute to you. But back to the grants, the free money that you all deserve. So one of the grants that we have that's super popular, a lot of people love, it's called Small Business Improvement Grant. So you can go to njeda.gov if you forget, everything, you don't write it down, and you can search Small Business Improvement Grant. That is a reimbursement grant for up to $50,000 or 50% of what you spent for furniture, fixtures, and equipment over the past 2 years. So say, you just, bought a new childcare facility, you renovated, you bought a whole bunch of tables, chairs, furnitures, you got, flooring done, and you spent maybe $150,000 in expenses. But the most this grant goes up to is up to $50,000. So half of 150 is 75. The max this grant goes up to $50,000. Say you spent $25,000 in expenses for furniture, fixtures, equipment, you can get reimbursed. It's a reimbursement grant for $12,500. It's a 2-year look back from the application date. So if you're in that situation right now, if you have some expenses that you're considering that, hey, I put in a whole new, room in my facility, I wish I could get some of that money back. Yes, that application is still, the funds are still available. We look back for 2 years. You have to show receipts. Documentation is very important. Super popular grant program, and there is a long period of processing time because it's so popular, and a lot of people become eligible. So as a childcare facility, as a restaurant, and also a great thing about this particular grant, which is unique to all of our grants, a lot of grants in the world, is that this one, home-based businesses are also eligible for this particular grant. So if you have, like, say you bought a computer, but you know,
2 years still?
there's a 2-year look back. Yes, you have to have, but you know, say you have computers or things that you have to show this definitely for your business, right? You can't just, you know, oh, I bought a new bedding for my home-based business. I need a new pillow. You know, that's not gonna.
No, that's what I'm saying. If you have to be in business for 2 years also to apply.
Not for this grant, no. This grant, you don't. You can be a brand new business, but you know, usually you need. This doesn't have a requirement. We have to be in business for any part of time. So it can be a startup business. It could be a home-based business. Obviously, if you're a brick and mortar business and you have a lot of expenses, it pays to get some of that money back. So that's a super popular one. It's called the Small Business Improvement Grant. Another grant that you guys will definitely, a lot of you guys will definitely can benefit you, especially if you're leasing a new place. You're in childcare. You may have some of you are going to buy property with Keller Williams. Some of you may lease property. We have this grant called the Small Business Lease Grant. Small Business Lease Grant. These are the terms you want to search on EDA if you go after I leave. This one will, it's not even a reimbursement. They'll pay 20% of your first year and second year of your lease payments, annual lease payments. So, but the main caveats are it has to be at least a 5-year lease. It has to be 5-year, brand new 5-year lease. It can't be a renewal, and you can't have a lease that they say 4 years with a renewal option. It has to be at least 5 years. It can be 5, 10, but at least 5 years. And it has to be at least 250 square feet, which we all know is pretty small. So those are the main thing. And it has to be street level. You have to be able to walk in from the floor. It can't be like this floor. Say you're leasing out this floor, that's not eligible. But say you can walk in from downstairs or you own the home building, then it is eligible. So that's a great program. That process is pretty fast. It's called the Small Business Lease Grant. 20% of your first 2 years lease. So they pay you the first 20%. Once your application is approved, a year goes by, you get another 20%. Josh, with the question.
Are there any criteria that would exclude you from that, aside from the physical?
Yes, one of the main criteria that will exclude you, I don't know how they check, but it has to be market rate. You can't be too high or too low for market rate. So they have situations where people have been denied because they had such a sweet deal, it was too low below market rate, or it was too high above market rate. You know, there's ways you can find that, different resources, and you could go through the process, but you know, and some people kind of know, yeah, I know it's the market rate based on the square footage, the town, the area, so that's a great one. But those are the main things that will exclude someone. And again, if it's not a new lease, also that one's very important. It has to be, you have to apply 1 year, your application date has to be 1 year from when it was signed. So you can sign the lease today and apply tomorrow, but say, you know, and this happens with a lot of businesses, you sign the lease, you fix it up, 3 months, you know, the contractor said 3 months, 3 months turns into 9 months. Now you finally clear the smoke because, okay, yeah, I got to get on EDA and do that application for that lease grant thing. 3 months and a day go by, now you're 1 year and 1 day too late from the time you signed the lease. So it's they look at the date that's signed on the lease and look at the date of the application. If it's 366 days, that becomes ineligible. And that happens to some people because, again, people lease space, you know, these guys work in real estate, they can tell you all the stories about, no, I'll be ready in 2 weeks. 2 weeks becomes, you know, real life because it happens in real life all the time. So that's important, yes.
So what if it's one buyer buying a building?
For which grant? For the lease grant?
Lease grant.
Okay.
They buy the building, one entity buys the building,
Mhm.
one entity buys the business, which is basically the same.
Right.
And that school business leases from the building.
A different business, not the owner of the, you can't, the owner of the business can't, I know some businesses lease to themselves, that can't happen, so it has to be,
Different entities.
huh?
Different
Different businesses, different LLCs,
But
right.
same owner of the LLC.
Same owner.
It can't be the same owner, no.
Okay.
It can't be the same owner. You're basically just a tenant, you have to be a tenant. So
You're gonna look through the ownership.
they're definitely gonna look for their ownership, they're gonna get forget the documentation, but they're gonna verify all that stuff. Yeah, they're gonna verify all that stuff, you can't do that. So, one thing that's important about all our programs, our loan programs, our grant programs, there's one more grant I'm going to tell you about, is that I just want to say before I forget, you're going to need it's called a tax clearance certificate. That's a state certificate. That just means you're in good standing with the state. You know, you're a registered business, your taxes are up to date. Tax clearance certificate is what it's called. You wouldn't need one unless an agency like the EDA requested it or some other state agency. You wouldn't just go out and get it just for the heck of it, but It's usually pretty easy. You go on the website and you put in information, 9 times out of 10 it's easy, and that one time, well, not 9 times out of 10, maybe 7 times out of 10 it's easy. 6 out of 10. 6 out of 10 times it's easy. Or that was like your friend was, I just went outside and I did this. And the other 4 people like, I don't know what happened. They spelled my name wrong. They said the number was right. The EIN was wrong. The LLC, you put a comma before LLC and in the box and that didn't show up, whatever. But we can work through that. That's not, that's a small, as long as it exists, we can work through the problem. But no, that's, that's a non-negotiable. Any questions about the grants? There's one more grant I'll tell you about. And we can, yes, about that one. Yes.
So you were saying once you sign the lease, it has to be 366 days before you apply?
No, sorry. You have to apply within a year. So I said if you apply after on 366th day from when you sign the lease, you won't be eligible. So you can sign the lease today and apply tomorrow. So the other grant that we have, it's called the e-commerce support grant, small business e-commerce support grant. So this is for retail, personal care, and restaurant businesses. If you have a brick and mortar retail, restaurant, or personal care business that's at street level, it's an e-commerce support grant where you can get e-commerce support services like a website, get different type of e-commerce, some marketing, some branding, anything in the e-commerce space. Say a restaurant needs to get their whole DoorDash and all that stuff set up, they'll do that for you. A lot of times people ask getting their websites done. I've had it's a well care center, but they do like senior care center. Somehow they became eligible for that grant and they got the grant. Yes.
Do you have to use EDA vendors, or can you say?
So there's 7 vendors. That's a great question. So there's 7 approved vendors that EDA has. It's on our website, and if you want, I can always send that to you. That you have to pick one of these vendors. So you can go to each individual vendor's website. You can call them, ask them about the grant. They all know about it. They all want to do the service because we're paying them directly up to $11,400 in services. So it's a service. It's directly with them. We pay them directly. There's no money out of pocket. So it's one of those 7 vendors. So you can vet different ones. They want to do it because if they don't, they know the money's coming from us, so they want your business, and so they can definitely. I can always send you those information about those specific vendors if you like. Any other questions about the loans or the grants? I have a little bit of information about our other grant we have specifically for childcare services, childcare businesses. Any other questions about that? And I'm just reading notes from one of our childcare directors. So one of the departments of EDA specializes in childcare grants and projects. Currently, you said did you apply? You have the grant for childcare. You had that. So which one did you apply for, and where are you in the process? Which grant? Is the one phase 1 or phase 2?
Phase 1, because we're actual phase 2. I think it's for home.
Right. So you're in phase 1 right now. Okay.
You might want to talk to that because I know there's confusion. That phase 2 is for that CC.
Right. Correct. So right. Exactly. So phase 1 is for center-based providers. Phase 2 applications are open for registered family child care providers. So she said receives one of yours 749 applications for phase 1. And as of March 12th, they've approved 568. So that's a good ratio when you think about it, And they said expect to approve about 600. So they're not done approving phase 1. So that's hopefully not in the small. Well, she applied already.
Yeah, I'm already applied. I'm already at the last phase. It's just
Did they what did they say you're approved or still processing? What did they say?
process.
Okay, yeah, I mean that's
Like the last, I guess they just they're confirming all the information.
yeah. I mean, well, one thing they
Like that, but
at least it's processing. One thing that they try to be good at is rejecting and deny people quick and early. Not because it takes time, but sometimes the processing just takes time, more whatever. But usually, if it's something that knocks you out for us, they'll let you know quick and early. So that's phase 1. Support reminders. Construction should not begin until grantee and contractor have attended a pre-construction meeting. Funds for the program must be expended no later than December 21st, 2026. Project must be commenced within 12 months of executing an agreement Once started, all construction must be completed within 12 months or no later than September 15th, 2026. If anyone has specific questions about their project, please have them contact their grantee project specialist. You have a grantee project specialist? I can put you in touch with somebody. I can put you, and one thing, to be honest, the good thing for anybody, like, I work for the EDA, I work in business banking. There's probably about 500 people there, but because I'm a live human person and you can call me and email me and I can put you in touch with a human being, like say, hey, such and such, we just want some feedback on something. Well, I can probably peek behind and I can probably look in the system. I'll see the words processing and I know who the processor is and say, hey, I met this woman and can you help her? And they'll help even with some of these other grants, because when I talk about the improvement grant, it's a long wait. Sometimes if you applied, there's been times I'll say, hey, such and such applied 2 months ago. What's the status? Oh, okay, I'll look at that one. I'll pull that one, not to the front, but I can give you some information. So that's all I have. I don't want to take too. I'll be here. Have some business cards. I know our hosts have some information for you. So
You said you had like a special loan for the childcare or something?
it's a grant. It's a grant for kind of, I think for like the first one, phase one, is for like different renovations and stuff for your facility. Phase two is for like home based. You have a home base now? So you may be eligible for phase two. So I'll get you some information about that. It's just called the let me get the right name for it. It's just called Childcare Grant. I'll send you the information. Something like that. Yeah. Phase two. So if you go to the EDA website, if you just put the word Childcare Grant, phase two, something will pop up. It'll take you there for sure.
And you can give us a website from your...
Yeah, njeda.gov, njeda.gov. And I would definitely follow EDA on social media and also sign up for the newsletters, because a lot of these programs come out, they have deadlines and you want to be kind of in the know. Like when phase one came out, like luckily she got it, but now it's closed, right? So you want to be the first to know, because sometimes when they open, they get oversubscribed, meaning that we have too many people, they'd have to close it right away. So definitely get on the newsletter, follow social media so you know what's going on, because there's some great programs. Yes, ma'am. Phase one is definitely closed, yes. So no one else can apply. So if you already applied, and her, like she's processing, but there's a phase two for home base. Any other questions? So I'll be here, I'll get some snacks and I'll be around. Thanks a lot. All right.
I'm Cheryl Darmanin. We're a team, and I'm going to introduce our team, which most of you know, Lori Hascsak, who specializes in childcare, and we have Jeff Bishak, who does a lot of our industrial supply chain, commercial real estate, and Rashad Davis, who does a lot of redevelopment and retail, and Jeff does retail also in commercial real estate. And then we have Janelle Mesquita, who is our executive operations administrator extraordinaire. So on behalf of everyone, I wanted to thank you guys all for coming. We hope that this was very valuable to you. I want to thank Sandra and Josh for providing the food for us. I want to thank Neil for coming to talk about the grants. You guys are welcome to stay here and hang out and have some drinks and some more food and ask questions to our guests or to us if you have anything. Lori's card and my card are up here. We are happy to help with any needs you might have with regards to commercial real estate. And we just want to thank you guys for coming tonight. Thank you.